My name's Rachel Sanders, CEO and co-founder of Rootine. So we are living in a new era of human performance where there's an abundance of empowered health consumers who want to make the most of their time, perform at their best, and really want to do it in a data-driven way. And nutrition, we know that nutrition really is the core to performing and feeling our best, yet 90% of people don't get the best adequate daily nutrition, which leads to rising health concerns like mood disorders, stress, fatigue, and more. And we really know that health begins in the cells with cellular nutrition at the core. And Rootine is a health and wellness company focused on optimizing cellular nutrition, which we do through better data science and personalized health solutions that enable individuals to perform at their best every day. And we're doing this and gaining the market traction because we're really solving an unmet need. We combine convenient health tests with one-to-one personalized micronutrients and digital health tracking, which creates a convenient and clinically backed way to address a lot of these rising health concerns that impact performance. And our numbers really speak for themselves. 70% of people improve health, 60% see a decrease in stress, over 50% see improved energy levels, and more. And we're doing this really through a better process. We combine these at-home health tests with one-to-one personalized nutrients and the health tracking, but we make it easy for customers to sign on through allowing customers to input their data in the ways that make the most sense for them. Secondly, we have better data and insights. We've developed this breakthrough personalization technology that looks at a comprehensive set of data points. So we're looking at lifestyle, blood levels, genetics, and then we'll be integrating with additional wearables, other lab tests. But because we have more comprehensive analysis, we have better insights, and those insights improve as we track outcomes over time. Finally, we're delivering we're creating the most precise nutrient formula with our technology, and then delivering the most precise product on the market that has better absorption, is slow release, and expands the market beyond traditional pills. Our form factor are microbeads, and we know that close to 40% of the market refuses or can't take large pills, but our microbeads open up the market to close to 95% of the people. Rootine is founded by myself and Dr. Daniel Wallerstorfer. My background, I started my career in investment banking, focused on the healthcare space, also experience in product and strategy at NaviHealth, which was a VC-backed digital health company. And I got my MBA from Harvard. And through that experience, connected with Dr. Daniel Wallerstorfer. He has the PhD in biotechnology. He spent the last decade innovating at the intersection of genetics, nutrition, and tech, and has built one of Europe's leading biometric testing labs. We're supported by a world-class team of business, marketing, scientists, and clinical experts across both our full-time team and our dedicated advisors. Our product suite includes convenient health tests, which we have a DNA test and blood test, and developing additional blood tests. And these tests inform our micronutrient subscription, which creates a very strong feedback loop. And our customers are really these quantified self-executive athletes who are building their own data-driven health stacks. They're getting clinical care with Forward and One Medical. They're tracking their levels with Whoop and Levels. They're exercising with Tonal and Peloton. And what makes us different is we're the only company in this personal health stack that's really focused on personalized micronutrients, specifically through the lens of cellular nutrition. And though we're focusing first on these quantified self and executive athletes, we're going to be able to expand over time. And we know this because we've already acquired more mainstream customers early in our journey. We retained them. We understood what opportunities and improvements we could do. So we know that we can succeed as we go back into that market later down the road. Our go-to-market, we have been 100% digital through 2020, but by the end of 2021, we'll be 85% digital with 15% combined between retail and channel partnerships. We've signed deals with Beta and Showfields on the retail side, also have a co-branded partnership with an IV nutrition clinic. And then on the channel partnership side, have recently signed a deal with a large European consumer health company called Vision Healthcare to launch in Europe here in this next couple of months. We are playing in a massive global market, $700 billion global nutrition industry in the fastest growing sector, which is personalized nutrition, growing at 15% year over year. And we know that we can hit 500 million in annual revenue with an average of 300,000 monthly customers. And given this strong tailwinds, we know there's going to be new entrants in the market, but we're going to continue to win in the minds of consumers by building a trusted brand that delivers real benefits through our multiple data points and really hitting on a better process, better data and insights, and that best delivery form factor.
Great, Rachel. Thanks for taking me through that.
Yeah.
One thing that, I guess this would be for the next round, because it sounds like this round's already done. But with respect to like the first slide, if you can go back to the first slide there. This is a good slide, Rachel. I just think before you even get into the deck, it's sort of like just level setting with someone.
Okay.
Again, maybe they already have context, the investor, but a lot of investors don't when they get the deck or they hear about it. It's sort of the first slide is, what exactly is this? Is it a product? Is it an app? What is it?
Helpful.
And where are you? Like you are, you have how many employees? When did you launch? And how much money did you raise already? Like just to level set. So now I have context going into it. The other thing that is missing up front, but you had it in the back, was sort of like, I guess, the vision. Like, what do you want this to be in 10 years? So you kind of tell me what it is, this is what it is. And this is where we think the big opportunity is. You talked about the market size and this being a $500 million revenue opportunity for you way back in the end of the deck. I would pull that up front, just to kind of like let people know, the investors know that you're thinking big. This is a really big opportunity. Sometimes people kind of check out, if they're like, they have this preconceived notion that it's not that big or it's not big enough for them or whatever, especially in the next round of financing, we start talking to bigger VCs and you're looking to raise, 5 or 10 million. I think you want to have the vision up front. I think this gives good context. The other thing is the story. I think the story is always important, in terms of where did you come up with the idea? Why now? Do you have a mission statement?
We do, but it's not in here.
What's your mission?
So we're really looking at helping people leverage their personal health data in a new way to enable optimal health.
Okay, that's pretty good. That wasn't in here. Any particular reason why you didn't share that?
I've honestly just tried to cut down the deck and make it as simple as possible, especially when it comes to kind of those intro slides around kind of what's the problem that consumers are facing, what is our solution, which it sounds like we need to be a little bit more clear on and can move that around. And then just one slide on the kind of like level set where we are in the world.
Yep.
And
I think the mission is good, Rachel. The reason why I like the mission is because I want entrepreneur to be super passionate about what they're doing and know that they're going to go all in and they really believe in the mission. They believe in what they're doing. It's not a transactional, what I'll call mercenary kind of like, hey, here's a business. We do this business. We make money. Shareholders get rich. Like, it's not that. There's a higher purpose here to why you get up. And I think it's important that omitted from the slide in the deck would be a yellow flag for me as an investor. Just wondering, how mission oriented you are. It sounds like you are, and it sounds like you have one, and that's great. So I wouldn't want to leave that open. I think it's important and to spend time on that. Like, this is our mission. This is why we exist. This is why I'm like fired up. I want to make a difference in people's lives. I want to, make a difference in the world. That's important. What's the next slide? The unit economics or no?
No.
Do you have unit economics where you show your CAC to LTV? I know you said that thing like 7X or whatever, but where you actually show your CAC and show how you get to the LTV. By the way, this slide has to go. That's the vision. That can go way up front.
Go to market is vision. Okay.
No. The vision one. The sort of this one.
Okay.
This should be really up front. Like you say, this is what it is. The first slide, the introduction, and then you kind of tell the story about why now and like how you came up with the idea and stuff. And then I would go right into like, let people know this is a massive market. Like, I usually like to call this slide the opportunity. It's not even just the market, it's the opportunity here. So you said it, the intro, then the story, then the big vision mission, then the opportunity, then you get in more detail. Here's a problem, here's a unique solution, revenue model, unit economics. You got to figure out where the competitive edge goes. Sometimes it's kind of right after the solution before the revenue model. So you've talked about your solution, and then you say, and there's other competitors out there doing similar kind of solutions, but nothing quite the same. And then revenue model, unit economics, then early traction, milestone plan, team, financing. something like that. I might have missed a slide or two, but
That's
that
fine.
is sort of a framework. And on the unit economics slide, sorry, on the revenue model slide, you kind of had it there. Just talk about how you make revenue. You had your products there, but how you think about the revenue model. Like when you're projecting revenue, like, you know, how much of it is coming from repeats, how much is new, like kind of just give a little rubric there for how you project and make revenue. And then on the unit economics slide, how do you make profit? So what is the CAC currently to get a customer in? Why are you confident that you can increase marketing without the CAC exploding? Like, how do you know there's more room to spend at that current CAC? And then on the lifetime value calculation, what assumptions are you using on churn, on retention, repeat rate, and revenue per order? And are you assuming that the early cohorts that you have already are bigger spenders than future because they're early adopters? Like, just, I would want to, like, that's probably one of the most important slides in any one of these type companies, is really, if you want to get big, you got to spend marketing, you got to get the word out. And then is the LTV a nice return on that marketing spend, and making people feel confident that's the case? I definitely spent some time there. And the other slide we're missing too is the financial projections. Even at a company this stage, I wouldn't go into detail. Like, I don't think you had financials, right?
No, I don't like to include them. I like to, I get into this first, and then I send them if people want to go in further. Is how I've been doing it.
Okay. And why did you choose to do that?
Based on advice I've gotten. Just like focusing on the business. Does this seem like something that's interesting? Have that first conversation. So like send deck, have that first call. If it's something where they want to dig in, I have the numbers ready and I send it to them after.
Yeah, I think you should have the backup spreadsheet and all the detailed and expensive things. I think you need just a high level. Like, here's our, it doesn't have to be far out. It could be just like the next 3 years,
Okay.
maybe 5, but like top line revenue and cash burn. Like, if there's, gross margin and cash burn or something. You just need a few lines, but some sense of like, how much cash do you think you're going to need over the next few years? Like, how many more rounds of financing to get to what size business? That to me is a key slide. Now, granted, it's early and any projections you put out are hard to defend, but that's why it comes back to the unit economics slide, because if you spend this much money in marketing, you're going to get this many customers, and this many customers are going to generate this much revenue, and you make that clear. Obviously, there's bounds there. There's a lower bound and upper bound, but you get some sense of, if we spend this much money, we're going to be somewhere in this revenue range, and the cash burn will depend on how efficient our CAC to LTV is. And so our cash burn could be anywhere between, it could take 5 million to get to break even, best case scenario. It could take 30 million. But in either case, even if it took 30 million, we're still creating a business that's worth hundreds of millions. So it's a great return.
Yeah.
So kind of like being able to like set that stage. Now, it sounds like you had success raising this money, you oversubscribed. That's not typically how it works. It's typically much harder to raise money. And it will be much harder in future rounds, no doubt. Raising money is hard.
Yeah.
It's really hard.
I'd love to hear, we've talked a little bit about, okay, we're at seed and thinking about the Series A in terms of the deck, but in terms of success, like getting from seed to Series A in consumer businesses, what have you seen has been super successful? Like, what are you paying attention to? Of course, like we're talking about CAC, LTV, average order value, all of that. But is there, what else is something?
Yeah, so in the seed round, I'm always thinking one round ahead. So in the seed round, I'm thinking making sure the valuation is attractive enough where you feel confident you can get a really nice increase in the valuation to the next round. That momentum is key. If you raise a too high valuation in the seed and you don't have the right metrics, it might be really hard to have a step up, and then you lose momentum. And if you do a down round or flat round, you're in trouble. So I always like to price the rounds really attractive, where I know a year from now, when I do what I say I'm going to do, that the valuation is going to go up. So don't
what's
be afraid.
That average step up that you're like hoping for? Obviously a lot,
at least a double in sort of 12 to 18 months in valuation. So the pre has to be twice the post of the seed. And the other thing I would do, and ties in, is to under promise and over deliver in terms of what your projections are and what you intend to do between the seed and the A. That's the second thing. And the third thing is, try to think about what is the one thing people need to believe to want to invest in the next round. Like sometimes people have a lot of different things that need to go right for the round to be successful. Try to figure out what is the most important thing that really drives success and keep investors focused on that and make sure that metric is front and center with your existing investors. Because if you got the right existing investors in, they would do their pro rata in the next round and kind of like a stage. Or even better, and this is my other point, if you can get an investor in the seed round that's putting a little bit of money in the hopes of putting a bigger check in and leading the A, that's ideal. I always try to find somebody that can lead the next round that's in the existing round.
Okay.
So if you have that investor in and they could potentially lead the A, that's great. Make sure there's one clear metric that you have them focused on that determines whether you can call it successful between now and the A, and keep them focused on that. And that's the one metric that they need to believe. And if you hit it under promise and over deliver, then you're in a really good spot.
Okay, got it. And then, last question kind of on that. We are in a massive market, but we're also in a market with a lot of competitors, and there will be new entrants. So continuing to prove that customers will choose us over others is very important. And so I'd love to hear your thoughts on kind of what are the metrics around proof points from your standpoint that would answer that question around, are you actually going to win in a super competitive space?
Yeah, I think the winning, more times than not, it comes down to the team, because the team's going to execution. It's an execution. It's capital and execution.
Okay.
I like to look at everything through the lens of VCP, vision, capital, people. And like you said, a lot of companies have a similar vision for what they want to do, but capital and people is where companies going to be able to differentiate. And so raising capital is important. I would raise as much money as you can in every round, because the more capital, the better position you'll be in to compete. But raising capital often comes down to the team that's behind the capital. So it sounds like you have a good team now, but anything you can do to bring in people that are best in their field into the company, you can really say, nobody has a person like this or a person like that. I think that becomes really, really critical. And if you do already have that, then I would play that up even more.
Okay, got it. No, that's super helpful. That was really all my questions. I wanted to go through the deck and got your thoughts on that, and then have those too. So this was super helpful.
Okay, Rich. Well, good luck.
Thank you.
Okay.
Have a good one. Bye.